Hi everyone, I'm Shannon Bruins of the Bruins Realty Group.
And I'm Stephanie George, and we're here today to talk to you about money needed for your purchase. So first thing, what's a down payment? Secondly, what is due diligence? And the third thing, what is earnest money?
I'm glad you asked. So you want to buy a house. Now you need to know what kind of money you need to buy a house, right? So there's a few money things that are involved when you're purchasing. The first thing you have to think about is if you want to put down a down payment, which most people are going to need to. So we thought we'd use an example of, let's say that you have a $100,000 house that you want to buy. Now when you do $100,000 as your purchase price, you're going to want to look at a percentage of down payment that you're going to do. And so one of the lowest down payments that you can do is 3.5% down payment, and that's with FHA. So in this scenario, it would be $3,500 that's going to be your down payment for this purchase. Now, there are other loans that we won't get into today yet. There's other loans that have 100% financing, so you might not have to do a down payment, and then some that have more down payment, like a conventional loan, things like that. For our scenario, this is a good one though. So if you have $3,500 that you have in down payment, then you're going to want to have that money saved and ready for closing. You get to the point though, you go, okay, I love this house and I want to make an offer on it. You're going to have to use some of this money up front on that offer. So the two things you have to do is the due diligence, which has a fee, and the earnest money. And you're going to decide with your realtor what you want to do and what percentages of those are important. So a lot of times we'll see people do a combination of due diligence and earnest depending on what the market's doing and what the seller is asking for when you make that offer. So let's say in this scenario that we're going to give a total of $1,000 in these fees.
Okay.
So for the due diligence, you would offer maybe $500 as your due diligence fee. Now, with that, what you're saying to the seller is, okay, Mr. and Mrs. Seller, we have this $500 we're giving you. You're physically writing a check to them that you will get back at closing. Now, if you do not close, you would lose that money. It's a gamble that you're taking, but you're having them take it off the market so that you can do all your inspections, your appraisal, all of those things that you need to do to get ready to close. Now, the rest of the money is in earnest money. And earnest money is another fee. We originally, North Carolina only had earnest money, and now we have actually both. And so let's say for our scenario, you also do $500 in earnest money. That check gets written to the, usually the attorney, sometimes it's another real estate agency. It's always held in a trust account. And as long as you close, you also get that money back. So you get both of them back. So there are other fees involved that we will continue to talk about and educate you about. Yeah, let's say that you pay these two fees, you do all your inspections, you love the house, and you're going to closing. Now you would actually have already then brought that $1,000. So that $1,000 will go towards your down payment, and you'll only need to then bring $2,500 as remaining dollars to closing. And that gives you a good idea of what you'd have to bring. So hopefully this will help people plan so that they can be thinking more about down payment and what they need to bring to closing. Thank you guys for joining us today to talk about the money that you need for your purchase as our part one. Don't forget to join us for part two, the money that you'll need for closing.
And feel free to comment below if you have any questions. You can visit our website, www.bruinsrealtygroup.com, or call us for a free consultation, and we'll let you know what these numbers specifically mean for you.
Great. Again, Shannon and Stephanie here.
Signing off.
Thanks.